Hello and welcome to the Global Dialogue. I'm Shereen Bhan, and joining me now to talk about the state of the world, but more importantly, how India plays a part in what's happening globally, is the Global CEO of Deutsche Bank, Christian Saving. Christian, many thanks for joining us here on CNBC-TV18. Appreciate your time. Before I talk to you about what's happening in the rest of the world, let's talk about why you're here in India and how India is playing itself out in this era of volatility. You've just met with India's Commerce Minister Piyush Goyal. What's the read on India at this point in time?
Well, first of all, thank you very much for having me. It's a pleasure being here. It's a pleasure being in this country. To be honest, it is. That meeting was very positive, but the overall spirit in this country is outright positive. I've been here now for 3 days, and I have to say I'm amazed by the steam, by the drive, by the passion, it's an economy which is obviously outright growing. It's actually with whomever you talk, the story is growth. And it is also coming, obviously, from Germany, being one of the leading European banks, looking at our clients. Our clients are actually looking to India out of the lens of this is an opportunity. A lot of global clients, a lot of multinationals, but also family-owned companies are in the process of reorganizing their supply chains, their production chains, and India is always top on the list. And that is, from a Deutsche Bank point of view, a huge opportunity for us. We have been here for 45 years. We have 23,000 people. We are growing immensely. We just put $800 million of capital into India. So we want to grow and our clients want to grow. So it's a very positive story. So I'm excited.
Well, let me build on that excitement that you just gave us a snapshot into. When you talk to your clients and you say that they're looking at opportunities in India, what are the opportunities specifically that they've been able to identify and that they want to zero in on?
The nice thing is it varies. Look, first of all, it's a market with 1.4 billion people. Number two, it's a market with such young demographic. You can see in which direction it goes. So simply from a market's point of view, it's an opportunity, in particular for a lot of European and German export-oriented companies. And there is lots to grow in this regard. Number two, the skill set which India is offering for all kind of industries is superior to a lot of other countries. And let me argue it from a financial point of view, financial services point of view. We have overall 90,000 people in Deutsche Bank, 23,000 are in India. Now, approximately 19,000 people are actually in our innovation, risk management, finance, operations teams. They are, so to say, the backbone of Deutsche Bank as a group. And the technology, innovation, and skills we get are core for the overall bank. And therefore, a lot of other corporates are also looking at India not only as a huge market, but also as a source of innovation, technology. And hence, it's actually your strength that it's very much broad-based. And therefore, I'm very positive on the development.
It's interesting that you brought up, the talent aspect. And I think the Global Capability Center story is a story that's firing on all cylinders at this point in time. But the point that you made about almost outsourcing risk management to India, and I think that's not something that is often appreciated or even reflected upon enough, and that's going well for you.
Well, look, risk management is obviously core to a bank, and most of you know that my career started in risk management. I was actually one of the people in Deutsche Bank who set up the rating center here in Mumbai, actually 20 years ago, over 20 years ago. But we are not fully outsourcing. I think most important also for a bank is that we are diversified, that we are well distributed. But one of the very critical analyses is coming out of India. Based on that, decisions are taken. But with the development we see here, more and more tasks can actually done here and automated here. So the quality of work is superb, but of course, we will make sure that we are not, so to say, creating a dependency which would be an own risk for Deutsche Bank. And therefore, we keep the balance, but clearly, India has grown significantly in terms of its strengths.
Back to one of the opportunities that you spoke of, when you talk to your clients, are they looking at making strategic investments in India? Are they looking at M&A? Are they looking at joint ventures? How exactly do they want to address the Indian market? What are the routes that they're looking at this point in time? How do you help them?
Well, again, it's not the one and only goal. Yes, there is, I think, over the next 3 to 5 years, there is big M&A activity. By the way, not only from Germany into India, but also from Indian companies into Europe, because also India wants to diversify. India wants to grow in the international market. I'm really hoping that we hopefully get a free trade agreement with the European Union very soon. I think it shows the bilateral strengths which we can play between the European Union and India. So there is on both sides there will be M&A activity. Now on the other hand, if you think about Europe, if you think about our challenges but also opportunities, we need to read the Draghi report. The Draghi report is talking about 800 billion of investments which we need to be done in Europe in order to be competitive in terms of technology, defense, other infrastructure investments, sustainability. Now, when it comes to technology, we need the know-how and the technology which is coming out of India. So I can think about actually the joint ventures of Indian companies with German companies. Then again, the other way around is that German corporates are actually trying to diversify. They are looking for additional markets. India is a market. So it always depends. But the nice thing is that it plays, in my view, to the strengths of both countries or both continents, so to say, EU and India or Germany and India. And therefore, I'm returning to Germany and also discussions with the government at home and saying, this is a market we should focus even more on.
Well, that would be music to the ears of the Indian government if you take back that message. But, on the India-EU FTA, it's been in the making for over a decade now. The hope is that it finally gets done. Do you believe that it's a closure is likely in calendar year 2025, or at least in this financial year? And more importantly, as you look at, we're waiting for the contours to play themselves out. But as you look at this trade deal, do you believe that it's going to ensure that we actually see a shift of manufacturing to India? Or do you believe unutilized capacity in Europe will actually be utilized to its fullest as duties come down and people can actually import to India?
I think to the latter question, both. To the first question, I'm not close enough to give you a deadline, but I can tell you indirectly that over the last 3 to 6 months, I have seen a mind shift and a mindset change in Europe and in particular in Germany when it comes to growth and competitiveness and what we need to do in order to stimulate growth. And this has something to do with our new government, which is clearly focused on competitiveness and growth. But I can also see that the EU is actually very much focused on, for instance, finalizing the FTA. Now, whether it takes 3 months, 6 months, I don't know. But the passion and the spirit, I think, on both sides to get together and to get something done is there. And that is different than from what personally I have felt in the previous year. And that is always the precondition that good things are happening. And in this regard, I also do think that the most recent visit by the EU Commission and also Ursula von der Leyen to India was well received. The feedback is very positive. And it's in my humble view, it's on the political side like on the corporate side. If the leadership is pushing for something, if the leadership really wants something, then usually things are going. And then things are also sometimes going quicker than we think. So I'm optimistic.
Well, we hope that optimism translates into an actual deal being inked. But, you talked about defense spending. And I think I want to bring up the fact that we've actually now seen this commitment being made at the NATO summit of Europe committing to 5% of spending on defense over the next few years. As this remilitarization of Europe takes place, do you believe that this is going to aid growth, or do you believe it may distract from other fiscal measures that may be required, in your words, the Draghi measures that you talked about, to kind of spur growth?
I think it will actually aid growth. It will not put the focus away from other items. And again, I best can talk obviously about my home country. And I find it overall very positive what has been decided. There's on the one hand the additional spending on defense, which is bitterly necessary in order to be capable. But at the same time, the country has established a 500 billion infrastructure fund. So you can see that actually the government has seen both as needed. Now, public spending is not the one and only answer. We need to be careful about that. But what I like about is that next to the public spending, and that was always my comment, the public spending is okay because Germany can afford it where debt to GDP is. But the public spending is only coming to, so to say, a full success if we get structural reforms in Germany, which is driving at the end of the day investments, which makes sure that private money is coming in. Because even the 500 billion is not enough actually at the end of the day to stimulate growth in Europe for good. And therefore we need the private investments that need structural reforms. And I do think that this two together and the actions we can see in Germany in particular, and Germany is usually the engine for Europe, will help that on the defense side, it will add growth and obviously also for other items. Now, last point, I think we need to learn from other countries. If you look at the US, for instance, a lot of people always said, well, defense spending of, I don't know, in the past 3.5%, 4%. Yeah. Well, if you really go into the details, the defense spending actually fired the technology spending. And a lot of technology, a lot of innovation came out of the defense spending. I'm always leaning to a statement that is that part of Silicon Valley is actually a result of defense spending. And if we do it right in Europe and in Germany, and we use the defense spending not only, so to say, for tanks, but also for innovation and technology, we can actually create growth which is far beyond the initial defense spending. And that is driving the economy. And I do think this is more and more what people think. So also there, we have an opportunity.
Yes. So, it's unusual in a conversation these days that we go for about 10 minutes and not talk about the US. And finally, we are talking about the US. So let's address what's happening in America at this point in time. And let me ask you that in the context of the 3 Rs: rates, the possibility of a recession, and key risks associated with the Trump tariffs. What's the pulse on each of those?
Well, let me start a little bit different. I first of all think that you should never underestimate the resilience of the U.S. economy. The investments and the flexibility of that economy, the innovation part, is something which really brings resilience in its own. And therefore, look, at the end of the day, one cannot exclude a recession, but the US has always shown that it is more resilient than forecasts have been. And therefore, I think there is a good chance that there is no recession in the US. One cannot exclude it. But the underlying data from the US remains pretty strong. On the rate side, look, I do believe that the Fed has a clear picture. They're very much data-driven. We as Deutsche Bank do believe that there is actually at least one decrease in interest rates this year, potentially more next year. But obviously, inflation needs to be watched. And therefore, I, at the end of the day, do think, yes, a gradual reduction, but not something over the summer, rather to the end of the year in order to keep inflation under control. And my personal view is that is actually also quite right, because at the end of the day, inflation is the biggest poison for an economy. I talked about rates and recession risks, which look. There is a risk, obviously, not only of a recession. There is a risk that the volatility of decisions can have a more global impact. There is a risk, obviously, of further global geopolitical tensions. But there is clearly the risk, if the tariff discussion is escalating, that then we have a global downturn, and we notice it not only in the US, but also in other countries. And therefore, I think the biggest mitigation and the best mitigation is that we come to conclusion on the tariff agreements. And to be honest, one needs to actually see it from both sides, because also Europe actually, I think, did it well that it didn't escalate it in April, because there are also certain items where Europe, in my view, needs to step up and do things differently. If this is getting done in a, so to say, calm way, I do believe that we can avoid a recession. And then I also do believe that we will see rates coming down. And therefore, the months of July and August is quite important, actually.
You've been a banker for over 30 years now, and you've dealt with volatility. And many conversations that I've had over the past few weeks, people say that it's different this time around. What do you believe is different? When you look at how volatile things are, and what's also been surprising is the remarkable resilience of the global stock markets. I mean, unfazed by geopolitical strife, unfazed by actual military conflict. So how do you explain the resilience of the markets as well?
Well, I think, first of all, that the resilience is partially explained by a much better preparation of the players in the market. Simply look at the financial institutions. If you think about how financial institutions, the robustness of financial institutions, be it in the US or in Europe, if you compare it between the last global financial crisis and now, it's night and day. To be honest, I think we are as robust and as rock solid as we have never been before. And that's not only for Deutsche Bank, that's also for other banks. And therefore, the market has a different level of trust that even if there is volatility, we can absorb it, be it from a liquidity point of view, be it from a capital point of view. The same, I can tell you from a lot of corporates. If I look at the equity ratio of German Mittelstand clients, it is nowadays higher than 15 years ago. Corporates actually improve their own balance sheet in terms of liquidity, in terms of capital ratio, in terms of corporates learned through the COVID crisis to work on their supply chains, to make sure that they are more diversified. And therefore, I do believe one needs to take that into account, that we simply have, in my view, more robust players in the market. Now, I think you are touching on a really important point, that I'm also amazed that the markets are so solid. We see some, volatility in the markets, but then you are at all-time highs back very, very, very soon. And look, with a 35-year background in banking and very long in credit risk, I hope that people are nevertheless always prepared that there could be the one or the other event which really brings the market more severely down. And therefore, for that, you need to be daily prepared. And that is, in my view, the task, obviously, of a management of a bank to do that for your own balance sheet. But more importantly, that we advise our clients on risk management. And in this regard, I can really see a renaissance in advisory. The level of discussions we have with our clients on risk management, on hedging their risks, is not comparable to the years before. And it's an opportunity for banks who have that know-how and who have an investment banking capability.
It's a very important point that you made there about just healthy balance sheets, whether it's for banks or it's for companies. And we've seen that happen in India as well. The deleveraging has happened significantly after the GFC. But what does that mean in terms of the appetite for risks? Because the problem that we're faced with in India is that even though companies are sitting on strong balance sheets, private investment hasn't picked up. So when you look at European companies who are sitting on strong balance sheets, at this point in time, do they have the appetite to take big risks, whether it's M&A or it's expansion or it's looking at new markets?
I would say that over the last 3 or 4 months, that appetite reduced because if there is too much volatility in the market, and it's not only the so to say the market volatility, but if the trust in so to say the planability of issues is decreasing, then companies are stepping back. And we have said that also in our business and in the overall bank's investment banking business on the origination and advisory side. Fortunately, we haven't seen canceled deals, but we have seen delayed deals. So people are a little bit more nervous and cautious to do big investments. Nevertheless, they also see the opportunity, and they see actually the opportunity Europe has in these days. They see the opportunities in growth markets like India, in other Asian markets. We can see trade corridors between India and other Asian countries, the Middle East, which are really opening up. So people are looking into this. And I think that we may see for a couple of months, once this trade discussion is hopefully done and dusted and people have a better outlook view, I would say that then those investments are coming back. In general, from the balance sheets of the banks, but also the capability of the corporates, the risk appetite to invest long-term into growth is definitely there.
It's definitely there. So 2025, from an M&A point of view, from an IPO point of view, what are you foreseeing? I mean, India has had a great year the previous year and continues to see a lot of excitement in the IPO market, but the US was tepid. What do you see as the story for global IPOs as well as M&A for 2025?
I think it's a bit muted, to be honest, and that's what I also said at the last conference when I was talking about Deutsche Bank in this regard. Very happy about the overall development, but that particular business a bit more muted. But to be honest, as long as you know that it's only delayed deals, that people want to have clarification, for instance, on the trade discussion, that's not a big issue. We are planning this bank and also our corporate clients, they are planning for the long term. And whether it happens then in Q2 or Q3, at the end of the day, that doesn't matter. But clearly, I would say 2025, if I compare it now with that what we thought at the start of the year in the M&A and IPO market, more muted. But I wouldn't say that this means that the whole market falls away. It will come back then next year.
Oh, so let's talk about what's happening at Deutsche Bank specifically. You had a strong Q1 ahead of estimates. You're hoping to grow at between 5.5% to 6.5% annually over the next few years. What are you going to prioritize given the many opportunities that you see and the strong balance sheet that you sit on? And also in the context of the many tech changes that are happening, how do you reposition or rewire yourself at the bank?
That's a lot of questions, but you're right. I'm overall very happy with the development. It was a complex time 6 or 7 years ago, and now we are on a clear trajectory. And you know the opportunities which are presented for Europe, but also globally, because the answer of a lot of clients is that they would like to have at least one European alternative to the US banks. And as we are one of the last investment banks, corporate banks with such network, we are that opportunity is huge for us. So I'm generally very, very positive. Now, from the investments, it's focus, focus, focus. You can imagine that everybody in the bank wants to invest, and we need to take the decisions as where actually we do this. I do believe that one thing is clear, the global expansion of this bank, in particular in markets like Asia Pacific, is on top of the agenda. And we can see that also the brand name is really wanted here. That's one of the reasons why we invested so much in India. On the tech side, look, I think it is simply critical and fundamental and the precondition for being a successful bank for 3 reasons. Number one, you need to have tech for client experience. The client experience will be better with digitalization, AI, and technology. Number 2, cost efficiency. Number 3, very important for all of us and for us obviously too, is regulatory compliance. The more automated our processes are, the better it is. So technology is kind of, if we build the house of Deutsche Bank, technology is the platform.
You know, AI, and everybody's talking about the disruptive impact of AI across different sectors. From a bank's point of view, how much of AI are you already using? And what could a bank potentially look like 5 years down the line because of AI?
Well, first of all, the answer is that a bank remains a bank. I don't think that a bank will turn into just a technology company. People want to have our advice. The most important as a banker is that you have the trust of your clients.
But will bankers be replaced by AI agents?
Well, I would say that the coverage person and the people who are talking to our clients in the majority will remain human beings because that's what is wanted. But the way we get to decisions the way we are handling the request, the way we are handling transactions, front to back processes will more and more automated, and AI can help a lot. Research analysis can be done a lot with AI. Now, we need to have, obviously, for that, the most important is everybody's always talking about AI, and obviously I love it. I saw, again, certain cases here and projects which are done in India for the world of Deutsche Bank. Super exciting. But the most important is that your data is clean and that you have good data. And therefore, I'm always saying, let's get everything right before we talk then about the luxury, and the luxury is then the application of AI. But to give you some examples, we are using AI in the retail banking when it comes to client servicing. We are using AI in the research area with great results. Completely different. I was just talking to our audit head. She's using AI in order to get to quicker and better audit reports. So it's across the bank. The most difficult task for us and the management board is to do the right prioritization.
So let me end then by asking you, since you will soon be leaving India, I'm going to ask you about the message that you leave your Indian team with. What's the target that you've set for Kaushik and team here in India, given the fact that you've made a pretty big investment bet on them?
Well, first of all, I said it yesterday when I left Mumbai, where obviously the majority of my time was, and a good part of our team is. I thank them because I think they have done fantastic work. I haven't been there for the last 2 years, which was a pity, and I will come back sooner. But they have done great work, and I'm really proud. Number two is that I think everybody should realize what opportunity we have, and we have our growth plans. But if I really go through my head again over the last 3 days, I think the team around Kaushik, they can even achieve higher results because the opportunity in this country is great, and it's nice to see that the brand name Deutsche Bank resonates so well. So actually, it is a success story which can even become a bigger success.
Well, we wish you the very best of luck with your plans for India, as well as the conversations that you're having with your clients. And of course, look forward to speaking with you as and when the India-EU FTA does finally get done. Christian, it's been an absolute pleasure. Appreciate your time here with us in the capital.
Thank you very much.
Well, with that, it is time for us to wrap up this edition of the Global Dialogue from all of us here on the team. For now, goodbye. Many thanks for watching.